Okay, traders, welcome to this live intraday strategy webinar in SB Trade Desk. Today is Wednesday, August 2nd. Good to be with you guys this morning. D, Philippe, Gary, Kelly, we got Scott in the room, Steve, Ziad, Amen's here. Good to see you guys here in the room. So, for today, first things first, we're going to go over the setups that we covered from last night's update. Dollar index still holding in this key region of support, so we'll go over that. We'll give you an update on Kiwi Yen, Kiwi Dollar, which both seem to be making some progress on those trades. Dollar CAD also highlighted setup from last night. And then we'll take a dive into some of the Euro crosses that we've been following. So Euro Dollar, Euro Kiwi's on the list, Pound Yen is on the list. I guess we'll take a look at Pound Dollar while we're there as well. And from the previous update, we'll go over Aussie Yen and the Ethereum trade. Came into major resistance, nice big old reversal. You want to watch for a pullback in Ethereum, but the broader trade remains constructive on that end as well. So as far as event risk is concerned, obviously tomorrow's Super Thursday, so we'll take a quick look and or an in-depth look, I should say, at those pound crosses that we've been following, specifically Pound Yen and Pound Dollar. Don't see Sarub in the room yet, but we will take a look at gold as well. And that's what's on my menu for today. So if you didn't hear a pair that you've been following, or you have any trade set up for specific assets you want to follow, please feel free to throw them on the message board at any time. First things first, let's take a quick just reference at the greenback. So here's what the dollar index looked like yesterday. Just wanted to highlight one thing. Look, again, like I said, we don't want to be the ones trying to fight this trade and calling a low, but we're still in this critical zone. 92.62 ends up being a longer term swing low, I think from 2010, if I'm not mistaken. Not even 2015, that swing low. Okay. And that's just lower from where we are. Remember, the weekly chart is what's really going to make or break the dollar index this week. So we are below that trend line right now, which has been a very, very nice pivot in price over the years, even catching last year's swing low. But we'll have to see where the weekly close is. So still at a critical juncture here for the dollar index. Not really convinced to chase this any lower from here. No change to any of our outlooks from yesterday. Bearish invalidation still 94.50. Here's what the near-term chart looks like. Again, we've been highlighting this embedded channel resistance. This is off the high that we made on 26th of June. You can see that touched base here last week. Here we are again to start the week, heading into NFPs, or ahead of NFPs, basically into today's Asia session. That level still converges on the lower parallels. You don't really want to get too excited about short dollar exposure well above 92.60. Any questions on the dollar index? Interestingly enough, you saw the euro stretch into a new high overnight, but the dollar index did not. Here's what the euro dollar looks like. I guess we'll just go out of order here real quick. So this is DXY. Any questions on this before I move off? Really nice gauge of what the dollar is doing here. So number two, real quick, we'll just go into the previous update. So here's what we were looking at with euro dollar on Monday night, right? We were talking about this slope resistance on the daily chart, big level of resistance. You had the 2010 swing low. That's what I was thinking of just now at 118.76. But you were at structural resistance. So as I said yesterday in the webinar, I was actually holding a short off this. We did take a quick 30 pips on half that trade once we start to break down just ahead of this high. And then I actually got stop break even on the rally in overnight trade. It's turning over again, still respecting that slope. But here's what euro looks like right now. Right? So again, you got that dribble as low as 117.85 or so, where we got out a little bit of the trade, and then we continued to hover into Asia, and then this rally here took me out in the rest, and here we are turning over again. 118.76, the high in overnight trade, 118.54. So still at risk. Divergence in momentum, albeit weak divergence above 70, not really the reference points of an ideal divergence signal, but it's there, right? So keep your eyes on this. Again, I would like to choke up near-term support along this parallel, which will give you a better level right along the weekly sort of opening range high here. Actually, the weekly open. So bring this up, drop that 117.14 level for now, and we'll continue to look for support at the weekly open, which converges on basic channel support. And that gives you 117.45 or so. All right, if we break higher from here in euro, show you the daily chart real quick. I mean, here's what we're contending with. There's that longer term slope off the yearly lows. There's the upper median line parallel up into resistance, and there's that 2010 swing low way back here. So look, if you break north of here, I don't really have anything on tap until we get somewhere in the range of 2050, 2060, basically the upper parallel of the broader formation we've been following. This is off the 2015 lows. But it's a pretty big region. It's a pretty big region. So I'm still thinking lower. Unfortunately, again, that trigger or the upside swing that you got, that was an overnight trade. So some of you might have gotten a decent trigger on the downside up there last night. But let's see how the U.S. opening range taps out. If you get that last stretch, I'll still be looking for near-term exhaustion in price. That's what the 60 looks like, 30. We'll want to see that breakdown below that 40 region RSI to really start to suggest we're getting a nice turnaround here in momentum. You can see that since the start of the week, basically since the low that we planted here, just above channel support. Let me stretch this out a little bit for you. Right? Ever since this low, essentially, look at the momentum signature. This is kind of a good drill when we're looking at near-term price action to really be able to assess what momentum is saying. Every pullback we've seen in price, there's 40 as support. There's 40 as support. There's 40 as support, right? So these are all, things that you tend to see in real constructive trades. So to, really have a more conviction downside bias, let's call it, we want to really see that phenomena start to wear out. You want to see that 40 break, and you want to see dips into oversold condition. That's healthy in a downtrend, just as it has been in the uptrend to see bouts of overbought. These are things that you want to see in uptrends. Okay, so still on watch. Turns are slow and arduous. It's not going to be an easy trade. If it was that easy, everyone would be on it. There's a lot of reluctance, and you'll hear that across the street if you talk to guys here in New York, to buy the dollar, which is kind of, as Jamie might have hinted to you guys on Twitter earlier in the week, these are signals of sentiment extremes. Usually if someone's saying, they're really fearful of buying the dollar, that's probably when, things are ripe, let's call it, for the turn. So any questions here on the euro dollar? Okay. So we have been following Euro Kiwi, but I want to go back to the order that we've been following because Kiwi was highlighted in a lot of trades that we published last night. So I'm going to go back. Euro dollar was number 2. Number 3 here is going to be Kiwi yen. And here's what Kiwi yen looked like last night. So DXY, no change to any of the levels. Again, 92.62, major key support. Here's Kiwi yen from last night. So look, this is a newly formed or newly identified. I just added this pitchfork yesterday. I don't really want to rely too heavily on it, but you can see that the 50 line was a really perfect tag of resistance here yesterday before the breakdown. And obviously a break of the median line saw acceleration. Now we dipped into this key support barrier 81.95 into the 82 handle. This held, kind of hovered through, and we're just sort of oscillating there right now. Around 82.27, just above the median line. Here's what the chart looks like now. So obviously this has been a trade we've been following for a while. I'll show you the daily chart first. The major premise of this last week, and the major thing that we highlighted was this key resistance here at 83.56 into 83.73. What are those levels? Very simple. 2016 high and the 2015 high day close. Gave you a nice little range there. You saw one little spike through on the 27th, but we quickly reversed, closed this session well below, and on a closed basis, that level has been rock solid, right? Ever since then, this thing's been on the pullback. Now, the level we've been looking at and the level that we've been talking about since the start of July trade, and here we are in August 2nd, still talking about the same level, is that 82 handle. Last year's open, I mean, it's not necessarily a technical significance just because it's last year's open. I would pour more emphasis on this year's open, right? But guess what? We also had the monthly open there last month, and it was last month's opening range low. So any way you slice it, this is still the major key area of support. And that's still what we're focused on as we get deeper into the week here. Okay, we went for a tag of it last night, continues to hold as support. That's still the level to break. If we were to break below the lower parallel, which coincides with last month's swing low, that would be the conviction for a larger correction here in Kiwi yen. Now, I'm not crazy about being long the yen, but the technicals are the technicals, and support is support. And if support breaks, that's sort of the game plan here. So the short side bias that we've been looking for has come into that 82 support. At this point, you just want to be a little bit more cautious. I don't have any exposure on this right now. Here's what the intraday chart looks like. We dipped right into that key support, and we rebounded. We're kind of still here. As long as we stay below the 50 line, excuse me, which since the start of the week has been resistance, essentially, right? We'll continue to favor the short side. This is where, again, even on near-term slope, just a basic trend line extending off the May 29th low. Tag twice, pretty close there. That coincides on last month's swing low, 81.67. So you know the level of support of which would sort of, again, give you the downside break, validating a little bit more of a conviction downside bias here in Kiwi. Obviously, Kiwi is wicked these days, but yesterday we finally started to see Kiwi dollar start to move off. We've been looking for an exhaustion high in that thing. It seems like forever, but it looks like it's starting to materialize here. So if we get a near-term recovery, look for some exhaustion, possible short entries here into the 82.80 region, let's call it. This will be determinant on time, but that's resistance. Break lower. You still need to get through 80.67, but that's the conviction break. Such a scenario, you're basically looking for a drop into this level, guys. That'd be the conviction drop there. If trading view's been a little finicky these days. Oop. You know what? I won't copy it. I'll just draw a new one. There we go. Okay. So the levels to watch here in Kiwi yen. Any questions on this pair? A nice pair to trade if you want to kind of stay away from dollar exposure per se. We still have NFPs on Friday, but from here, immediately, you could see a little bit of a bounce off this key support. Again, this has been a very, very nice pivot in price along this level, but largely speaking, you want to stay bearish below 82.80, break below 81.65, really puts this thing on course for a much steeper move. And by the way, just to highlight where this slope is coming from, this is basic copy of basic trendline support here. All right, on to the next one, Kiwi dollar. So here's what good old Kiwi's doing. I've kind of just been showing you the daily charts on the intraday page, which is not really intraday per se, but the intraday chart hasn't been all that sexy. It's really been more clear for me on this just because the magnitude of the advances has been really wicked. But look, 74.80 into 75.15, we've talked about that region, 50% retracement from the decline off the highs that you made back in 2014, specifically in July of that month, or that year rather, and the 1618 extension of the broader advance off the lows. Okay. Hey D, I was thinking of you this morning. She says, "Morning, Mike. My Kiwi dollar short is doing well, in at 75.82, and now stop brought to 74.88. Nice. And remember what we talked about yesterday, D. Remember what we said. If we got the close below 74.80, that would sure make me comfortable, right? Well, we got the close below 74.80, and as I was looking at this yesterday, I was thinking of you. So I was hoping you'd hold that trade, and you did. Well done. Next downside target, I'd be looking at 73.98. Your stop at 74.88. 74.88. So remind me of your entry again. I wouldn't necessarily want to put it that high. I think if you get above yesterday's or the overnight highs here, you're probably going to, go right back into this key region again. Right. So again, that's a swing trades. Remember, I'm on the intraday here. I'm thinking much more near term. So yeah, on the longer term, I do think you have way room to the downside. But for now, as it stands right now, I mean, D, you got to keep your things in perspective. If you're willing to hold this through another like 50 or 60 pip bounce to the upside, sure, I'm cool with you. But for me, I'd be one of those guys who'd be trying to play the bounce and then actually trying to fade that. So the first things first, you're coming into some near-term support near 74, 70, 73.98. That's former swing highs here that you can see in 2016. But more importantly, it's that, reversal day close. A lot of times those will offer some significant targets in price. And you can see on a close basis there, and then we pull back, check to the support, that converges on slope. So that's my first level, of which I would look to take a little off the table. But yeah, I'm a bear on Kiwi. I've been wanting this thing to turn over for the last couple of weeks. Unfortunately, again, I didn't get a chance to get that entry at 75, which was ideal. This chop sideways action kind of made me lose my patience, but a lot of times I'm just capitulating myself. So well done on that, D. I'd be looking for initial at 73.98. Questions on Kiwi dollar? Way to hold that trade. Love the pip magic. Super trade, says Kelly. Well done. Yeah, I mean, if you guys are taking trades on the swing side, Jamie's been killing it. He's been really, really on point with some of these positions. So having a nice run here. The intraday is what I don't like about this. Here's what it looks like. Hopefully, we get some structure to the decline. And that's my issue with trying to play this on an intraday basis. Look, I mean, at the end of the day, this was a pretty nice initial weekly opening range. You're rallying to a high, you make a low, you test that same high that we made from the previous day. It fails, you break the lows. It's Wednesday. So, yeah, I would expect this to continue to kind of dip into the lows for the week. Near-term support, if you see a rally, high day close at 75.50, you stay bearish below 74.80. So yeah, I'd have to say, D, I mean, as far as your entry is concerned, or as far as your stop's concerned, 74.88 is not bad on an intraday basis. Questions on Kiwi? Going once, going twice, and that is Kiwi dollar. So let's go back now and take a look at Euro Key. That's 4. Euro Kiwi will be number 5. Here's what Euro Kiwi looks like. Another one that we've been tracking for a while. and it's made a nice move. Let's start off with the daily chart here. Here's what Euro Kiwi looked like earlier in the week. Ooh, we'll come back to dollar CAD in a moment. Euro Key, here it is. So this was back on the 31st, and we had noted that this thing had come off slope support. Here's what the daily chart looks like. Nice old slope. This dates back to the yearly lows. We went over this yesterday, so I don't want to kind of beat this dead horse. But remember, the main level of resistance that we were talking about that we needed to clear was 59. Guess what? We're trading above that right now, 59.50. You have basic trendline resistance. I'll show you this in a moment, coming in just higher. But largely speaking, as we were talking about yesterday, if we were to close above these levels, we'll finally clear the July opening range. Okay, forget this month. We never broke last month's opening range. So again, inherently and objectively, aside from what anyone thinks, this is just range break to the upside. So I do like this moving higher. Another good way to be short the Kiwi without having to actually take dollar exposure. My only problem, again, is that on the euro side of things, I think that looks like it's reaching a little bit of an exhaustion trade. So with caution, I'd say I'm still constructive on this. At these levels, here's what the intraday chart looked like. So again, remember earlier in the week, we were looking for 58.38 into 58.50 first target, and there's that confluence resistance at 59. Here's what the intraday chart looks like now. There it is. Bum. Okay, so 100% extension. Remember, we cited that concern yesterday. Oops, might be a little bit concerning. We definitely do not want this to stop at 2 equal legs. We plowed right through the 100% extension, the broader advance from here gave us that. So we plowed through that. Any way you slice it, it just looks good now. So you look for the pullback to look for some support right around 159. That longer term trend line is a basic trend line off of the January 2016 highs. So we did go for a test of that earlier this year, specifically here in May, and it held. So yeah, I mean, we could pop through a little bit higher here. If you take a sliding parallel off that same slope, you know what I mean? You could see this thing maybe getting into the 160, 50 area, but it's made quite an advance, guys. So just use some caution. I wouldn't go chasing if you're not holding long exposure at the weekly highs here. But I do think it has some further upside to go before we start to correct. And one other drill that you'd want to do, and I don't want to get the chart too cluttered here, which it already is, but one other drill I'd want to do is just take this slope and extend it off this high and see if we get any confluence. And if we do that, further highlights that zone of resistance there, okay, into the 60-50 area. So a nice little drill to keep an eye on. At this point, we can kind of get rid of this slope. Down slope obviously has been compromised there. It's a conviction rebound and breakout. Near-term support, don't need that anymore. Actually, that crosses through some nice levels there. But no change to any of the levels. Feel free, guys, to, again, as always, take a snapshot of the chart if you need this for future reference by clicking on that camera button, top right-hand corner of your GoToWebinar screen. Any questions on Euro Key? So again, no change to any of the levels from here. Your next topside break. Again, you have that soft target at 160.19. That's this one. But look for this here to be the bigger resistance region just above 160.50 or so. Now look, I'm not really interested in playing a short side in this. Even if it comes into that resistance, I'm not really a big fan of, I mean, you guys know what my bias has been on Kiwi. So I'd much be rather waiting for a decent pullback to get back on the long side than necessarily trying to play the short on this. Remember, this is, from the daily standpoint, this is big. This is big. As long as we're able to hold above 159, it's pretty big. Okay, that is Euro key number 5 on the session. Let's jump into the sterling crosses. Obviously tomorrow, Super Thursday. So here's number 6 and 7. We'll do pound yen first, and then we'll jump into the pound dollar. So here's what pound yen looks like heading into the BOE interest rate decision and the quarterly inflation report. Where is it on the daily? So you guys know we've been looking at this 2015 basic trendline resistance, nothing fancy. We tested it earlier this year, or excuse me, this month. I guess keep saying July is still this month. Last month, I guess, at this point. And then again on the final attempt, what do we do here today? You're heading into a major, event risk for the UK, so I would take this with a grain of salt. If we were to close firmly above that trend line, I kind of would like it, but at this level, not quite there yet. From an intraday standpoint, though, you're golden. I mean, you kind of took out all the top side targets already into 146.73. Here's what the intraday chart looks like. This is the 240. Here's the 120. And here's what we look like earlier in the week. Okay, so again, daily chart highlighting that key area of resistance. Intraday chart, we had opened up the week at support, right at basic trendline support. This is just off of the June lows, but you had multiple touches, right? Perfect touch of support. We were talking about this being resistance, and we said, look, if it breaks 146, then we're talking. We need to kind of really clear through those levels to really validate the breakout. So we got it. There's the first target at 146.38, second target at 146.73. That got taken out, and now you're holding this range. So the lateral levels continue to hold really, really well. A topside break from here is really nothing until like 147.35, which is a nice breakout, but I do like maintaining that bias. Here's the 120. This is the 120. Here's the 60. Pretty clean. Okay. Near-term support, bring that down to 145.90 at this point. Convergence of that slope resistance, the sliding parallel, 50% retracement. We got that extension on there. And I just want to see where the 786 comes in. Not really a level. That has offered much play in price, but with an ATR as big as this, it might be something just worth keeping an eye on. But the target would really be this larger extension here to 147.35. Any questions on pound yen? Another one we've been following since, that major drop in support, 144.30 last month. Okay, and that is pound yen. Pound dollar. Here's what pound dollar looks like ahead of Super Thursday. Also very similar in the setup, but still a little topsy in the near term, and that it's kind of unable to really make much progress above the median line. It's encouraging, okay, that we're seeing price continue to sort of bob along that median line as support after breaking through. But like here, you would have wanted to see a little bit more acceleration on the initial break. So look, 132.72, that's a target we've been talking about for a while, the 1618 extension off the lows. It's just higher from where we are right now. Still would like to stay constructive on the trade on a larger pullback, but we'll have to see what or if the BOE triggers any type of price action here that's worthwhile. So daily chart, pretty clear. Again, stay constructive above that June high or May high, I guess it is. Here's what the near-term chart looks like. Okay, so even within the confines of that formation, this is the pitchfork we've been following just off the lows from June. You guys have seen this before as well. There's that median line. You can see us sitting on it as support. So kind of taking a little bit more of a neutral stance ahead of BOE. I can tell you that if it does dip in support, specifically structural support, I'd definitely be interested in looking for exhaustion, possible long entries, a break higher, like I said, 3270. And then you're just looking at slope. There's not really much horizontal resistance to like 3370. So you'd be looking for 3330 and then right into that 3370 region. But largely constructive. Risk for near-term pullback, like this was something that we noted yesterday. It's still continuing with this divergence. Price action making a higher high, specifically on a close basis. But as long as we're above this median line, do not try to fight this thing. Obviously, we're still long as well on the swing side of trades. So, you know, honestly, I hope this thing dips into 32, then just explodes. That's just my humble opinion. But there is plenty of upside room if we're able to hold above this median line. Questions on British pound. Now, it's going to be interesting to see what the BOE has for us, and specifically with the inflation forecast. That quarterly inflation forecast tends to be the bigger mover. Again, with the pound as strong as it has been, it's going to be interesting to see if that really alters their outlook for inflation. And remember that they don't have the same type of mandate that the Fed has, which is fostering maximum employment and price stability. Their singular mandate, along with the ECB, is inflation. So with the pound continuing to rally like this, that'll really cap inflation. And if that starts to happen and their inflation forecasts get pushed out even further, you might see the pound come under some near-term pressure. In my humble opinion, again, that would be an opportunity to get back on the long side. Questions? Comments? Concerns? Okay, a quick review on Aussie yen. I'm taking a completely take complete neutral stance on that for now. We'll come back to gold in a moment, and then we'll do Ethereum. But Aussie yen, look, the break of channel support didn't give us the run we wanted. We are moving lower, which is what our base case scenario has been. But we still need to break through this key support to really validate a larger move to the downside in Aussie yen. So just use some caution on this one. Like I said, I'm taking a little bit more of a neutral stance. Here's what Aussie yen looks like on the intraday chart. And it's just annoying me. We didn't even get the tag of it. And here we are kind of making a little bit of a rebound. I guess the intraday chart shows it better. Right? Here's the 4 hour. So this is what you guys have been seeing on the intraday page. This channel support. You saw the break, which kept us bearish, largely reversed off it, but then here we are kind of teetering out right ahead of key support again. So none of the levels have changed, and technically, you want to stay bearish below 88.70, but this 87.55, 87.64 barrier, we've been talking about it for weeks, and it's obviously been a major support barrier. So, I don't want to be looking for a short exposure into there. I do still think this thing inevitably moves lower before it moves higher. Longer term, or largely speaking, like I said, I do want to be a buyer of this on a larger dip, but near term, I still think you risk a little bit of a move lower. So if it spikes into this region, another move into that key support. This is, by the way, the new bearish invalidation level and the objective weekly opening range high. So if we were to top 88.70 on a rally here, we would kind of put the long buys right back into focus. This would be sort of a lowered floor type of deal where price turns ahead of support. That's so funny, Philippe. I just skipped over dollar CAD for no reason. It's right here on my list. I'm looking at it right now. We'll definitely come back to dollar CAD, guaranteed. Any questions here on Aussie yen? Again, I'm going to take a little bit more of a neutral stance till this thing either breaks below 87.55 to give us that conviction correction play, or if it tops 88.70, like we've been saying, this thing has got all kinds of bullish slope going on. You'd be looking for that rally towards the 2011 high at 90. Look, someone in the room was asking the other day, is this a double top? Right? I'm not sure who was asking that. And this is a perfect example of why you don't necessarily want to what's the word I'm looking for? Preemptive that move on such an expectation. You really need to see the break of the lows to confirm that. The target in such a scenario, like I said, a conservative target would basically take you into the 86 handle down here. Whoops. Down here. But first things first, look for a break of this range. Look for a break of this range. On its face value, this thing has just made a weekly opening range above support. So I think we'll get a little bit more definitive move once we clear this this range. So before I jump back into Ethereum, which again made the breakout as well, let me go back into dollar CAD. Dollar CAD has been one of my favorite ones. We highlighted this last week as we were coming into 24.15, which was a huge area of support. Again, just a quick reminder, you had the actual swing low from 2016 here. Specifically in May, you had the 618 extension of the entire decline off of last year's high. And you had a basic parallel of the larger slope we've been following, extending off the lows there from September right into that region. Even the steeper slope of the highs right into that region, right? So now we're getting the bounce. What now, Mike? That's all good and dandy. We're seeing the bounce. Are we going to move higher from here? Well, look, at the end of the day, it's interesting because despite the dollar move lower earlier this week, dollar CAD's been able to hold its own. And that's a tell. And that's why I continue to favor the long side here. Now, remember, technically, we'll come back here. I think dollar CAD was here. Oh, it was last night. Boom. So here's what dollar CAD looked like last night. And technically, if you noted, we were talking about this high from last week, 125.76. Break there is needed to really shift the focus higher. It also converged. Well, yesterday it looked like it converged on the lower parallel of the former descending slope, which is now resistance. So look what happened. And look at this in near-term price action. Get granular with it to really see technicals in play and the beauty of it. Look at this. Resistance, resistance. When we broke, acceleration. That's exactly what I want to see. Well, guess what? On the way down, that same level should be support if this is legit. Boom, boom, support, strong response. So I'm of the mindset that you still look higher in dollar CAD. I think there's plenty of room on the magnitude of decline that we've been getting for a decent recovery. I'm not talking reversal, but I'm talking near term. Yeah, I think you see a little bit of a bounce here. So what we're looking for is we want to see a little bit more structure to the advance, right? I want to see something that I can work with as far as trying to figure out slope. So if we do this properly, let's see what this looks like. I'm going on the fly here, by the way, just see. And not bad. So if you do a modified pitchfork off the low there, Okay, I'm not crazy about it, but we'll keep an eye on this. We'll keep an eye on this. Um, looks interesting. And guys, bear with me one moment. I just want to also see what this looks like. Okay. Um, again, these are just drills I do to kind of see if we have any type of confluence on the slopes there. But long story short, I like it. I like continuing to favor the long side here, specifically on this break. So if we hold above this level, specifically the low we just made in Europe, I think it's a basic break of former slope support, turned resistance, now support again. And that would give us the break of this upper parallel as sort of the go-ahead, right, to eye those subsequent topside targets. Initially, you'd be looking for 126.80. That's just sort of a soft target swing low for that decline that we saw last month. And then a basic, just 236 retracement. I mean, the most basic of retracements still takes you up as high as 27.40, 27.39. So some levels to keep in view here. Again, I'd like to stay constructive while above. Basically, let's mark it here at these highs from the initial opening range for the week. 25.30. Any questions on the loonie? Sometimes you get lucky calling the low like we did on this one. Sometimes not something you want to do very often, but as we said, once you come into a trade that has had such an exhaustion and such a major key confluence of so many different support structures, for me, it was kind of like, it's now or never to see some sort of recovery. Questions on dollar CAD? Still not out of the woods yet. Need to clear that 26 level to really get the conviction reversal here. A major key resistance, by the way, is still up here. If you look at the daily chart, this is really what's highlighted, right? That same slope, resistance, support, break saw acceleration. Support, 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 break saw acceleration. That same line converges on the basic 236 that we just noted and the 2016 low day close. So that would be up here, this level. All right. So that is dollar CAD number 9. Let's take a segue back to Ethereum. Again, making a lot of noise. Here's what Ethereum looks like. So the final target, where was it? Here we go. The final target was, or the level that we had to kind of really keep an eye on, was the 618 retracement. I think we talked about it here in the webinar right here. Well, this is where we highlighted it yesterday. 618 retracement came in at 235.67 or 65 here. So we kind of probed right into it. Remember, the median line is there as well. We didn't even get a major, we barely got an hourly close above that before turning lower. And then again, back below 24.44, you got to look correction. So I'm looking right now for kind of a decline towards 207, 208. Again, the median line is there, really nice pivots along that region, and a basic 50% retracement. Broader terms, this is a breakout, Here's the 240, guys. This is a pitchfork formation we've been following off of the yearly highs. You saw support, a little bit of an overshoot there, a little bit of an overshoot there. Remember, markets don't work in a vacuum. Median line has been rock solid. The last time we broke through it, you saw rapid acceleration on the way down. You saw key support and a nice reversal. All along that median line was resistance. Here's the break. here was the break. And this is the break that we were looking for earlier in the week, right here. We were constructive above 186, looking for a break above 203. Once you got the 203 break, it was off to the races. Took off the first median line, second median line, 236 was a target. We kind of since have removed that to add on the new retracement now that we have a concerted low in place. So here are the new and updated levels from that setup earlier in the week. Might look a little cluttered, but they're all just basic fibs of the most recent move. So you have one fib off the decline. This 618 is of the ascent. And then these near-term fibs are just from the low that we made late last month. And again, the 50 gives you near-term support here at 207. Kind of want to look for that to hold for a topside play. Look, at the end of the day, this is one thing I want to say about the Ethereum trade here is very determinant on time for these downside targets. If it mutters lower, this is basic trendline support off the lows. So if we were to shoot lower today, this is the bearish or the bullish rather, invalidation level. If we were to sink below that, everything, kind of dump that 618 at this point. If we were to sink below this level, it's like sayonara at that point. I think you'd get a larger breakdown in the trade. I don't foresee that happening. That's not my favorite scenario. Right now, my favorite scenario is this thing moving lower, finding support at one of these two levels. Again, you'd be trading against this low, essentially this region, inevitably looking for that topside break in Ethereum. Not too surprised to see this weakness here today, specifically if the dollar is going to take a little bit of a breather. That would be pressure to the downside on this trade. Any questions on Ethereum? Interesting plays so far in this one since we've been tracking it. Don't really like where Bitcoin's trading at right now, so I'm not really gonna go over this trade. It's kind of just holding near the yearly highs. Not really a scenario that I'm pretty comfortable trading right now. So we'll let that one sit until we get a little bit more clarity on what's happening in price. 202 is strong support, says D. So what do you have at 202? So we were looking at 203 earlier in the week before we broke higher. But now that we've made the break, I'm actually not looking at 202. I'm looking at like 207 as near-term support first. That's just halfway of the advance with bullish invalidation down at like 193. That's the level. If you break back below, you saw the reaction. It's been resistance. The break saw acceleration. So yeah, we could come back and test it as support, and that converges on basic slope support off the lows. So maybe, but I would want to be constructive above this region. Does that make sense, D? You want to always take as far as the fibs are concerned, we want to use the most recent higher or low in price, specifically when we're looking at the near-term picture. So obviously this was, a big low for the month of July. As we declined into that monthly low. It wasn't the monthly low, but the low into the close of the month. And then this rally, obviously that's a sort of a major high that we just reversed off. So near term, possible support levels, broader bullish invalidation. Topside break, 251, and 262, more importantly, key levels of resistance. It says, okay, thanks. Right on, D. You wouldn't believe how many people are getting, how many questions I'm getting on this in general once we started talking about it. both here in SB and just in general in the city here. There's a lot of interest starting to build on this. So hopefully the more market participants you get, the better the technical analysis works. Remember, it's a study of crowd psychology, essentially. So the more liquid, the more people are involved in the trade, the better the technicals will tend to play out. Okay, quick gander at what we're seeing in gold prices. Here's what the bullion trade looks like right now. We had highlighted this near-term channel support on Sunday, if I'm not mistaken. Yep. Okay. Obviously, we were talking about gold on the daily chart. Looked like it was making a break of this major, this is the weekly chart. Looks like it was making a break of this longer-term trendline resistance. This is just the same slope of the one coming off the 2011 record high, extending off last year's high. It looks like we're trying to make another break. Here's what it, well, let me just go through the charts. Here's what it looked like on the weekly, or the daily rather. It looks like, again, we were making that initial break. Here it is now on the daily. Still holding above that level of support. Okay, the top side target moving along in time is kind of getting a little bit eroded here. 1281 is what I told you guys earlier. That was the swing high that we made back here in July. And it converged on just a basic sliding parallel of that channel that we broke here and quickly recovered into. So I don't want to stress it too much. But really, the near-term chart is what gives me a little bit more clarity on what's going on in gold. Very, very simple channel off the lows. Again, 1, 2, 3 touch. Extending off this low, basically caught the lows. Extending off the highs, 1, 2, 3, 4, or 1, 2, 3 touch. So look, yeah, 1281 still marks up a decent level on the near-term chart. Okay, I could see a scenario where this thing spikes into it. Largely speaking, at this point, yeah, you want to bring this up to the Friday low now. And that's basically your near-term support for gold prices. So look, the trade is bullish. I do want to get long. I think you see a little bit of an exhaustion first. Again, if the dollar comes off near-term support, you're able to see a little bit of a bounce here in the dollar index. You would put some pressure downside on gold, and that would put us back, into structural support, either this trend line or ideally a little bit of a bigger pullback into this trend line. Now, once we get a basic break of the weekly opening range, I'll be more comfortable working with a basic retracement off the lows. Right? There's no way I can do this until I know that that's a concrete high, at least in the near term. But let's just, for argument's sake, say we do get a break of the weekly opening range. Then we are able to use this extension, a basic 236. Well, we already have that level highlighted right there, 1257. 38.2, well, that takes us into 1247. So it would open this up. I don't like doing that, but I would open this up as sort of an area of interest for support. Top side, 1281. Breach above there, you got plenty of room, basically into just shy of 13. 100% extension takes in 1296. The 2017 high day close thus far brings you 1293. Questions on the gold trade? Okay. Well, if there are no other questions, we'll go ahead and wrap it up here. There's pretty much not really much data coming out that you need to worry about overnight. We got ADP already out of the way, so keep your eyes on the Sterling Cross as we get into the Super Thursday. That should pretty much be ironed out as you head into the U.S. Open already. So we'll go over the aftermath here in the webinar tomorrow on the Sterling Crosses. Again, largely constructive, but you do want to leave room for an upset, right? If the markets do turn over sharply, I do think that'll offer broadly a longer-term long position from lower down, but we do like the top side of the pound, so keep that in mind. And again, obviously, the dollar crosses, guys, heading into tomorrow. We'll review all of those. We want to stay nimble still ahead of Friday's non-farm payroll report. Till then, best of luck trading, guys, and I will see you tomorrow morning. Cheers. Don't forget, Jamie's up in just a few hours for the midweek strategy webinar.